What up, guys? It's February 5th, and I want to go over the Ford Motor Company and their Q4 2022 earnings conference call and earnings numbers. Okay, so I'm a shareholder of Ford. Of course, this is the reason I do these videos. This is part of my portfolio. It's probably a mid sort of position in my portfolio. Not happy with the results, so I want to go into the bad, the good, and kind of give you that sort of more in-depth sort of description of what happened and what I expect from this stock and my interpretation of those numbers, okay? Remember, please, I'm a one-man show, so definitely appreciate your support. So hit that like button and hit subscribe, and hopefully you learn something from these videos, and we have some fun. In the meantime, let's get to it. So full disclosure, guys, so I am an owner of an F-150 Lightning. This is my F-150 Lightning right here. This is the Lariat 2023 extended range model. So very happy with this truck. I'm not a hater of any other EVs. I like Teslas. I love the Model 3. I love the Model X. I also like the Polestar 2. The Polestar 3 is going to be amazing. I like the Kias. I like the Volkswagens very much. I hope if the ID5 Volkswagen was here in the US, I'd buy that in a minute. So I'm a big fan of electric vehicles, okay? But this is what fit my circumstance for myself, my family, and we love it. We love Ford Blue Cruise. We love the technology in it. We love the range. No complaints about it whatsoever. So very happy owners of this vehicle, but nothing to do with being a shareholder and the interpretation of how the company is doing. So just want to make sure you guys understand I'm able to differentiate those two things, all right? Let's move on. So everybody should know what Ford does, right? It's very easy. So it's some cars, trucks, they got some commercial stuff, and then they got Ford Credit, okay? But essentially, I want to show you the new way that they will be reporting as of Q1 2023, which is next quarter. They're going to have a new method of reporting, which is this method here, okay? We're talking about Ford Blue, which Ford Blue is their ICE vehicles, right? ICE meaning internal combustion engine. That's their gasoline and hybrid vehicles. And then, of course, their Model E. And this is a little trademark. They sort of trademarked the Model E thing. They trademarked before Tesla could get it. That's why Tesla calls it a Model 3, not a Model E, because Ford beat them to the punch on that trademark. So Model E is electric vehicles. We're talking about the F-150 Lightning, the Mustang Mach-E, and the Ford E-Transit for their electric vehicle line. We also have Ford Pro. That includes that E-Transit and their vans, commercial vehicles, and Ford Credit, of course, their credit products to finance these vehicles once you buy them out of the dealer, okay? Now, North America, South America, Europe, China, and international markets, that's the rest of the world. This is where they operate. This is a global brand. Everybody should know this. No surprises there. But this is the new method of reporting that they will use to report their numbers or business segments next quarter. They're going to announce this on May 22nd, Capital Markets Day. So if you're a Ford shareholder, definitely circle this date on your calendar. All right, let's move on. Now, one thing that's always been good about Ford is their value proposition. That's my opinion, of course, nobody else's, but my opinion is their value proposition, especially when you compare them to a company like Tesla. And I did a video before, Ford versus Tesla. That's sort of outdated now because Tesla changed their prices like 2 weeks after I made that video. So that value proposition has shifted as Tesla reduces their prices, okay? But essentially, the only vehicle that competes with a Tesla, in my opinion, is the Mustang Mach-E, okay? The Mustang Mach-E. This is the only one that Tesla is competing with as far as a value proposition or the type of customer that Ford would have. And I'll start with this vehicle here, which I think it tells you a lot, essentially, which is the Ford Maverick, okay? The Ford Maverick, there's no Tesla vehicle that has the utility that this vehicle here has, or the price. The top line of this Maverick, you're looking at about $29,000 for the top end Maverick. The customer that buys or is interested in this Maverick is a completely different customer than a Tesla Model 3, a Model X, Model 3, Model Y, completely different. And these guys at Ford, they expected very few reservations when they announced this, but they sold out on reservations. They took like 200,000 reservations of this vehicle when they expected only 50,000 reservations. So this is a big hit for Ford as far as a little utility vehicle that is inexpensive, that is profitable for Ford, that I think is going to be a big hit, okay? Now, their F-150 products, the normal products, 40-something years, top-selling trucks in a row, all kinds of Motor Trend and Edmunds and all these car magazine sort of awards. F-150 Lightning, we just spoke about that one. There's nothing else that comes close as far as an electric truck. Of course, the Cybertruck will come out supposedly this year, by the end of the year. Who knows, right? That may be delayed again. But as of this video, nothing else competes with the Ford F-150 Lightning. And also nothing else competes with the E-Transit, right? Other than, I would say, the Rivian truck for Amazon. There's no other electric solution for commercial vehicles other than the E-Transit Ford. Okay, now Bronco is a great also value proposition. Nothing that any other EV maker really competes with there, other than maybe Jeep, their hybrid Jeep, but that's a hybrid, not an electric. The electric Jeep gets only like 150-mile range, so I don't see that as very compelling from an electric perspective. But the Bronco in itself, great alternative to a Jeep. Right, excellent alternative, very good. And then of course the Bronco Sport. I think the Bronco Sport is for guys that can't afford the real Bronco, but they want to say they own a Bronco, but they're never going to show you the Bronco they own. So I think that's kind of funny. But there's not much value proposition here in my opinion. And then the Ford Explorer, it's a very trusty vehicle, excellent seller. Their special edition ones are great, and of course their ICE, which means internal combustion vehicle Mustangs, the new edition Mustangs for 2024 that are going to come out, are going to be amazing vehicles with the latest technology, all kinds of cool gauges and screens to gauge engine performance, and everything that the car nuts love is going to be in the new Mustang GTs and Shelby editions that are going to come out. Now, another tidbit of news here. So, Ford is getting back into Formula One. This happened right after they announced their earnings. They announced their earnings. They did some damage control. Then they went right into Formula One to announce that they're doing the battery packs or the power and the power boxes and helping build the engines for Red Bull team. Okay, so if anybody who knows me, I like Formula One. I am a Ferrari fan, not a Red Bull fan. I usually root against these guys. I will still be rooting against these guys no matter what, okay? So, not biased there at all. Now, of course, I got to show you guys, I got some skin in the game, okay? And this is our position in Ford at the moment. And it's a mid-sized position in our portfolio, nothing too crazy. We're talking about 500 shares at $12.74, current price $13.23. We're still positive on the position. If it goes lower, I'm okay adding under 12. I believe under $12 a share would be a good position to add, because this is not an expensive stock. This is not a Tesla, which trades at a ridiculous valuation of like 50 times next year's earnings and like 40 times next 3 years earnings. Nothing like that, okay? This is not what you get in a Tesla. GM has a very comparable valuation to this, okay? Of course, their share format is different, so of course it's not a $13 stock, it's like $30 stock, but they're valued pretty decently as well. So Ford and GM are probably in the same category. Then you have a Tesla, which is an extreme valuation stock, in my opinion, completely overvalued. Now let's get to the numbers here, of course, and we're going to go with Ford market cap $55 billion, PE, that's your price to earnings ratio, 6.16 times current earnings, and then forward earnings at 7.51. So this is not even a double-digit PE multiple for Ford. So very cheap valuation here as far as the earnings multiples. Dividend yield of 4.35, payout ratio 20.09. Pretty nice, okay? The dividend will be paid in the next, I think in like the next week or two, maybe I think in a week and a half we get the dividend plus 0.65 special dividend of them liquidating their Rivian position. Remember, these guys were an investor in Rivian, so we're going to get 15 cents a share for each share that you own, plus 0.65 per share for the Rivian stake. They're giving this back to you as a shareholder. Okay, now earnings per share, EPS, that's the measure of profitability, 51 cents versus 62 cents expected. That is bad. That is a big miss, guys. So that's not good. That's showing that, hey, they're having execution issues. Execution issues are when the company cannot fulfill their plan, and there's some kink in the chain that's not allowing them to fulfill their plan, be that corporate costs. We're going to go into a little bit of what that is, or what I think that is later on. Okay, now revenues are good for 41.8 versus 40.7 expected. That's a nice beat. That means there's more sales than expected of the vehicles. That, frankly, I'm not surprised about being more sales than expected. F-150 completely sold out for the year. Mustang Mach-E's, nobody can get enough of those. Broncos, your Raptors, all those vehicles pretty well are selling extremely well, if not sold out. Okay, now guidance, I won't go too much over guidance because this is new guidance. This is not like I could compare it to something else. It's sort of soft. It's not very aggressive on the guidance for 2022, but at the end of the day, these earnings suck, guys. There's no way around it. These profitability misses are just killer. Even if you beat on revenue and you miss on profitability, it just shows that you have some serious issues there in the chain that we have to look at, okay? Let's keep going. So real quick, we'll look over the revenue, the EBIT. EBIT is earnings before interest and taxes. EBIT margin, of course, margin is 5.8. This is very weak. Like if you compare it to a Tesla, very weak margin there. These margins should get better if they can handle the issues they're having with their supply chains, China, and all these different things we're about to talk about. But it is nice to have free cash flow to back up the dividend, so that's very nice to see. So it's a little bit of a plus there on the adjusted free cash flow, even though it's gone down. Definitely nice to see free cash flow on that end. Okay, now moving on. Now, in comparison to prior quarters, we're talking about the revenue, the 44 million. This is a record revenue in the last 2 years, which is good to see, right? It's good to see that the sales are doing well, but the amount of money they're making, the margins they're making on those sales is not record as compared to Q2. If you see here, Q2 40.02 and they made 3.7. So that's a better execution quarter any day of the week than Q4, even though revenue was higher. If you guys get those two comparison of these two columns here, you can see that comparison. It's a lot better execution in 2022 Q2 than today in Q4. So that shows you a little bit of the sort of relationship between those two numbers there. Okay, now talk about the free cash flow. Also, free cash flow not impressive compared to prior quarters, right? Very sort of moderate, middle of the road. We'll talk about the $2 billion that the CEO said they left behind on their conference call. You can see that right here, that they left behind that number, and it sort of hurt. So he's essentially saying, hey, it should be 4.4, really what the free cash flow should be, billion dollars. We should be somewhere around right here as far as a number, and we let all this go to waste because of poor execution. So at least they're telling us that up front. We have to wait till the next quarters to really find out. And of course, cash balance and liquidity. Here's the cash balance so far. As far as, not cash balance, the liquidity balance and their Rivian stake, which is pretty much almost liquidated at the moment. That's what they're passing to us as shareholders here now on the dividend that's coming up. Now here, I wanted to use this slide a little bit to show sort of what the issues were as far as the execution issues that they're telling us. So here they're telling us here, hey, pensions and joint venture asset impairments in China were essentially the headwinds to the $2 billion shortfall they had on their earnings. Here also it shows that material and freight was a big deal as well. And I think that makes up most of the difference here of what they're telling us, material and freight. So material, that's inflation, right? That's inflation of parts, and freight is the cost of moving things around the world, have that be parts or their vehicles to their dealers. That cost is still having a big impairment on the earnings. So that's something that we definitely need to see corrected on future earnings calls, and we'll keep an eye on that, okay? And now real quick on their earnings call, I just want to give you guys this real quick. It's a bad start to a call when you start it this way. When you say, we appreciate you all joining us. I'll start by addressing the obvious. Our fourth quarter and fourth year financial performance last year fell short of our potential. And while we generated record cash flow, I don't know about that. Or cash flow, I think they mean revenue. We left about $2 billion in profit on the table due to cost and especially continued supply chain issues. These are the simple facts. And to say I'm frustrated is an understatement because the year could have been so much more for us at Ford. So it's a good thing and a bad, right? It's not a good way to start a call. But at the end of the day, Jim Farley's a guy that will see the issue and he'll confront it head on. So not surprised that he's coming right out of the bat and saying that on the call. Okay? And he follows it up later by saying, essentially giving us the reasons for these. And these are essentially the summary of those reasons. He's saying, with any transformation of this magnitude, certain parts are moving faster than I expected and other parts are taking longer. Now, the first part of our transformation is to completely overhaul our industrial system. That costs a lot of money to do, guys. Product development, manufacturing, and supply chain management to deliver better cost and quality. This is critical because it provides the foundation for everything else we do. Okay, it founds our future. That second transformation, which we're aggressively building today, building new and incredible new growth businesses like Model E. So they're saying, hey guys, this is expensive. Rebranding, retransforming, retooling for these things to build EVs is expensive. As Tesla, these gigafactories are billions. I mean, $4 to $6 billion. They cost more than NFL stadiums, right? Ford Pro are a huge bet on our commercial vehicles, which will be high growth and high margin, not just products, but software and services business. So again, when I think about what Jim Farley's saying, and I encourage you to read the entire transcript or to listen to the entire call, he fesses up to absolutely everything, which is what you want in a CEO. You don't want sugarcoat. You don't want all this thing of like, we have the best team, which they kind of do say a little bit, but we have the best team. It's going to be fine, guys. Don't worry. He doesn't really say that, but he says, hey, I'm pissed off about this. We could have done better, and we will. So what do we do as shareholders? Let's see Q1 2023. We're not going to panic and just overreact to bad earnings for one quarter. These guys are going through a transformation. We're going to let them sort of go through that process, and we're going to monitor that in the meantime. We're going to watch it like a hawk. So next forward earnings, we're going to be expecting more more improvement on these headwinds, and we're going to be watching those numbers like a hawk, okay? If you guys have any questions at all about these earnings, please let me know. I'd love to help you. Let me know how I can be helpful to you in questions about the stock market, investing, the overall economy. That's what I'm here for. Again, visit me on Instagram, Twitter. Peace out.